Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, let's shift focus to another earnings conversation. We have Hindalco, which reported a good growth in revenue, 20% jump in profitability as well for the September quarter. I spoke to the MD, Mr. Satish, and started off by asking him about the pricing band for aluminium and also their hedging strategy. Let's listen in to what he had to say.
A normal hedging strategy is about 20 to 25%. But as we come closer to the quarter, like what we saw now, and as you said, the LME is reaching all-time highs, we started to add on to actually lock in the gains for Q4. So whereas you see the 49% at an average of 2750, the last amount, let's say the last 10 or 15% hedges have been at that 2900 and above. The average then comes down to the 2750. So we took advantage of the very high LME prices to add to our hedge positions for Q3 and Q4. Otherwise, our hedging strategy does not change. Generally, we do only about 20 to 25%.
Okay, got it. Also, if you could help us out with regard to the EBITDA per ton for the India business. That's been looking beautiful, rock solid, so to call it. Do you expect the aluminium EBITDA per ton to continue around the similar levels that you've seen in the past quarter? And what about copper? In the past, we've been talking about this ballpark 600, 650 crores per quarter. Stick to that?
So as I think even last quarter when we discussed, as I said, if the LME stays above the 2,800 that we have been seeing, the EBITDA per ton will be at that $1,500, which is what we are running at right now. Now, why Q2 is more remarkable is because it was a monsoon quarter. And during a monsoon quarter, generally coal availability, coal costs go up compared to Q1. But in spite of that, our plants delivered a very stable and excellent operational performance. And which is why even in a monsoon quarter, we delivered a 1,500 plus EBITDA per ton. Now, coming to copper, as you know, TCRCs are low. We have been guiding that because of our varied value chain in copper, we will be delivering 600 crores plus, and we are maintaining that and will continue to do that.
Got it. Just to close the loop then on the India business, you have announced the expansion at the Aditya unit, and I think that will reach full capacity. Now, all eyes are on Mahan because I think you have scope to double capacity out there. Are there plans to go ahead and announce, a capacity expansion? Because the India business suddenly is looking very, very rock solid, since that's a direct play on aluminium.
You're absolutely right. And we, of course, have plans to do the next phase of expansion in Mahan. It's just that the timing is what we are going to look at. We are preparing the background work. You see, Aditya, we are doubling capacity from 360 to 720. And that's the projects that are ongoing now. Probably we'll be announcing Mahan sometime next year.
Got it. Explain to us the Novelis Capex then, Mr. Pai. What went so wrong? From the time you'll have announced it, the Capex now is close to double of that. In the middle as well, you'll have gone ahead and increased it. So the street said, okay, cost could have gone up. But now it's up another 20% from the last announced Capex number. Explain to us, what went wrong, and is there scope for this Capex to even go higher from here on? Because the return ratios now have come down to mid-single digits.
So let me make a few important points on our Bay Minette project. So Bay Minette is providing us 600,000 tons with the capacity to go to 1.2 million tons of rolling capacity in the US. The US is the largest market. Because of the tariff environment, anybody trying to import into the US faces a lot of hurdles. So we think that this project is going to be highly accretive to Novelis going forward. The second point on the Capex itself is that it is a very complex project. There is a high inflationary environment in the US now. So more than 50% of that increase is due to cost inflations that are going on today. So I think that overall, when you look at it, the US is a great market. The demand is good. We will have, of course, pricing strengths because we'll have capacity in the US. So we think overall, this project will be good. And most important, we will be delivering higher than the cost of capital for Novelis on this project.
Interesting. But what about, if you could give us an ROC number? Earlier, you were estimating, I think, low double digits. Now it will be likely 6 to 7%?
No, it will be high single digits.
It'll be high single digits. Got it. On this expansion, the ROC will be high single digits. Got that. Given the expansion that are going to be taken at Aditya, in addition to this Novelis cost escalation that we've seen, the net debt to EBITDA that was well behaved for the last many quarters, that could perk up, right? Where do you see the net debt to EBITDA peak out? And also, if you could tell us the absolute debt number, what will it look like?
So look, I think that the India business at these current LMEs is going to be at a negative net debt to EBITDA for the next few years. So at the console level, we committed to the street that we will never cross 2. So our clear plans that we have made over the next 3 years is to make sure that the consolidated net debt to EBITDA does not go even close to 2. And that's why we are going to look at phasing the Indian Capex so that Bay Minette gets completed in FY28. And then we will be, again, Novelis will be at a cash flow positive and their net debt to EBITDA will come down. So I think it's suffice to say that the balance sheet of Hindalco overall is strong. The India business will be negative net debt, and Novelis will be the only one that will probably touch around 4 and then come down again.
Got it. Final question. Second half of the year is going to be a washout because of the unfortunate fire that we saw in September. But for FY27, Novelis gets closer to around the $500 per ton mark?
So let me first correct. Q3 will be the quarter in Novelis that takes the brunt of the Oswego fire. The mill will start in the first week of December. So Q4, Novelis will come back very strong. And as I said, the underlying business of Novelis is doing quite well. So we expect FY27 to be a very good year for Novelis.
So around $500 per ton, EBITDA.
That will be our target.
All right, $500 per ton EBITDA will be their target, also explaining the rationale behind the increased capex for the US business, Novelis that is. That's Hindalco, up around 1%. Remember, post the results and post the announcement that came in, there was a big knock on the stock. We take a